to the short squeeze. Markets, maybe they're a little worse than you think. Today is Expiration Friday. Our chips starting to soften up. Oil and Scott Bessent, they don't love each other. Can we get some clarity on the Clarity Act? The yields are back in town. Anthropic is moving their IPO, and we're going to break down why bonds are at the heart of the stock market's troubles. We got a lot to cover, so we better roll credits, Amin. Good morning, everybody. Good afternoon to my friends across the pond. This is the State of the Market. We're here every day at 10 a.m. Make sure to join us if you're watching me on YouTube or Twitter. Give us a like and a retweet or a share. And better yet, shoot the team an email and join the hundreds and hundreds of people that are watching us live right now. As we start the day, the S&P 500 is up about 0.4%. The Dow up 0.75%. The Dow got absolutely hammered on Thursday. The NASDAQ up 0.1%. The Russell 2000 0.6. And leading the way along with the Dow is equal weight. So that's telling us, hey, most of the market is green. But based on the NASDAQ, we have a little bit of weakness at the top. As you can see, Apple is down this morning. And, you know, some of the other Mag 7 and chip stocks are a little weaker. Crude, kind of at the crux of bonds, holding steady here, down a touch, but not really. And, you know, not a lot going on there. Bonds, which have been at the heart of this and going to be a major point of discussion when I bring Tim on with me. They are stable today. They're up, you know, an inch, you know, call it, a tick, but not making a big move like they did on Thursday. One of the questions I'm going to ask Tim is, does it matter what rates are? Or does it matter how rates are moving? That's going to be an important piece. It is Expiration Friday. So what does that mean? That means that in SPX, all the AM options, these options are months and months and months old, are expiring. Billions of dollars going away. And what makes it interesting is a lot of these options were purchased on that last drawdown. And so it kind of created a floor for the market. And now that we've had this big expiration and the follow-up expiration this evening, it could open up some air pockets so that if we do get a rate spike early in the week, next week, the market may be a little bit flat-footed. I would expect to see some exotic hedging going on in SPX today and on Monday as traders are dealing with this roll-off. So keep that in mind that, the couple days after expiration, before the market is really built up kind of how it wants to position itself, there could be air pockets lower, air pockets higher in terms of where support and resistance are provided by option flows. And the lack of those means that if we do get a wild move higher or a wild move lower, it can have a little bit of room to run. So that's something I want you to keep in mind as we head into next week. When we have NVIDIA earnings. So that is where we're sitting here today. We may see a little bit similar to what we saw on Wednesday. We're up. NASDAQ is weaker, and that could, over the day, maybe pull us a little bit lower. I'm not looking for another 66-point down day, but we may not end up as green as markets are currently. And the reason being is the strength in oil, the strength in bonds. We got Nvidia earnings, and there's a lot of balls up in the air. Now, one thing that is not having problems is Bitcoin. Look at the move this thing has made this week. This is IBIT. And this comes around the Clarity Act, which is going to apparently, or allegedly, and there's always strings attached to these bills, folks, but it's allegedly going to smooth the ability of crypto and stablecoin to kind of integrate into the economy, allow for cleaner, clearer regulation, establish who are the regulators here, among many other facets. And this bill needs to get through by the 15th of September, or it's probably not going to get through. And this is a lot of rallying for hope on a bill that is opposed by, an entire party. So this rally may be a little bit of hopium. We also have Jackson Hole next week. You heard Garrett and I talking. That's going to be about the integration of stablecoin into the economy and tokenization. That's part of this Clarity Act as well. So there's a lot. This rally in Bitcoin has been swift. From IBIT's gone from 36 to 43. Bitcoin itself has gone from 62 up to 76. This has bailed out Michael Saylor and Strategy for a little bit. So the move in Bitcoin has been strong and swift. I think it might be at a point around as we enter Jackson Hole. So like the day the meeting starts, that may be the day to take the other side of Bitcoin. Now, we've talked about, up to this point, I talked a little bit about Anthropic and them moving their IPO. We've talked about the bond market and its reaction a little bit. But let's kind of zoom out and talk bigger picture with bonds, how important they are to this market, and what the macro picture is, and get his view on the Anthropic moving up its IPO as well. Let's bring in my good friend and head of macro trading here at Option Pit. He is Tim Colby. Good morning, Tim.
Hey, how you doing, Mark? Happy Friday.
Happy Friday. Good to see you.
Good to see you.
Yeah. So, rates stabilize. They don't drop. Rates stabilize, and the market is up this morning. Not the NASDAQ a little soft, but S&P up, Dow up, equal weight up, Russell 2000 up. What are you seeing in terms of the interaction between oil, the bond market, the stock market, and then at the center of this is apparently Scott Bessent, who is, the conductor of these three right now.
It's funny. I heard you and Garrett talking about Bessent, and my reaction was the same as Garrett's. Like, I put it in the chat for the traders. I sent the link to Leisha, and I'm like, you got to watch this guy. This is incredible. You heard what he said, right? Did you watch this? You got to watch a replay. He said, I have asymmetric information and you guys have bad information. Who uses the word asymmetric? Who does?
Option traders.
Options traders. Yeah. Bessent ran a $2 billion hedge fund. It was his fund. He is a trader. He was a macro trader, right? He was funded by Soros. He is a trader on CNBC, answering questions, talking to traders with trader lingo. He is telling the market, and he is saying, this is a signal. I am doing this twist. It was $4 to $6 billion, whatever it was, which means nothing. It's
Right.
no
That's like a
money,
drop in a
right?
bucket. Yeah.
It's no money. The money is not mattering. And he did say, we'll do more. And he said, this is a signal. I am telling you, I'm going to do something if you keep getting rates higher. Look, there's a huge difference between Bessent and Warsh. Warsh is independent from President Trump. He's supposed to be apolitical. It's a different entity. Bessent is a Treasury Secretary. He's sitting right next to Donald Trump on every sort of meeting. They hang out together. They talk together. He is the financial version of Donald Trump. He is what makes Donald Trump so good in this area.
You know what's interesting about Donald Trump? First term, tons of turnover, right? Second term, it looks like we're starting to get a ton of turnover. You know who served his entire tenure as Secretary of Treasury his first term? Steve Mnuchin, not replaced. Trump loved him, right? The plunge protection team.
Also,
another guy that totally got markets.
A Wall Street guy.
Yeah, another trader, right? Now, Donald Trump, Scott Bessent, best friends, right? I mean, clearly he loves him, and probably going to do his full 4 years. Scott Bessent.
He's great. It's great.
Yeah. So it's interesting that the only people that seem to that can speak the exact language that Trump needs to hear when it comes to the economy are these two men. So somebody's going to have to write a book, from Mnuchin to Bessent, and it's going to be a fascinating read. But
anyway, case study. So the thing is, but think about it. What happened with the Japanese yen?
Mm-hmm.
Okay, the Bank of Japan, they intervened. It did nothing, and it went 2-3 weeks. Go back further. That's the yen. Go back further. Guess what? That's all those spikes are them intervening, and it did nothing until we get Bessent's like, I'm doing this too. We're in, and we're going to do more. Get out of the way. So he's watching markets. Yesterday, he quoted I think he quoted a currency. He quoted the days. He's watching the dollar. He knows it. He's dismissing the dollar move recently. Like, this guy's watching markets, and he's making things happen. Pull up IBIT on the 5-minute chart for the week, or something to that effect. IBIT being Bitcoin. Oh my God. So he does this twist, right? And gold takes off. The bonds are taking off. And I put in our chat, and again, and somebody asked, did anybody recommend IBIT? Dude, it took off it is actually my pick for ticker highlight show for this week. I wrote it up. And by the time it was in, I was rolling to my third contract. So at 9 a.m., it was probably 8:55. I'm like, dude, if they're intervening, this is Bitcoin's rallying cry, that you have governments are getting involved in the market. It's sort of everything they're all about, right? And then you have the backdrop of that. So I go in and buy calls, and they were 30-day calls were up 100% in 25 minutes, and I'm like, oh God. And so I rolled, I held them, I wrote about it. It took a little while for it to get published, but this would have been a special situations. This is what I wanted to put in special situations, but I couldn't get it out fast enough. You know what I mean? It just was gone. Sometimes you get time, and sometimes you don't get time. But speaking of special situations, we're going to have something next Monday, and it centers around all of this idea of, are we seeing a turn? I think we're seeing a turn in the market. I think Bessent is signaling to the market, look, we're watching. Trump right now with Iran is acting like he's in a position of power. You can debate whether he is, whether he isn't. The point is, oil prices at right now 86.43. Those are problematic, right? The 30-year at 5 3/4 or 5 1/4, I think it is. That's problematic. Bessent is telling you it's problematic. He's saying it's wrong. He's saying, look, that's an illiquid. And he said that too. He goes, this is an illiquid market, and we're making a market. I mean, that's what he said. We're making a market out here. And he's based. So look,
last I checked, the 30-year future is not an illiquid market. Last I checked. And last I checked, the treasury markets are certainly not illiquid.
I traded 30-year options, and I traded. It's when you look relative to the 10-year, it's illiquid
Yeah.
relative to the 10-year.
Yeah.
But yes, I mean, you can get a lot. TLT is illiquid.
Yeah.
But TLT tracks that 30-year contract, which is, as everybody reminds me, I know it's the 20, right? But the
Yeah.
market looks at that long end, that tail end, and that's really important for markets. And that is a big driver and headwind in markets. I think it was Blue Dog in the chat had asked, what is the next catalyst? What are the catalysts that I see? Right now, this overhang of oil and this overhang of yields is reaching a little bit of a tipping point, and you can tell because the treasury market, they're willing to act, they're willing to do something. And so I have something for Monday for special situations we're putting together. It's about companies that have been left behind. Did quite a bit of reading about this research. There's companies who've done well. All these companies have similar patterns. Clorox, the one that we did for Ticker Highlight Show, this falls in that category. If you call Clorox, I made a little W in there. That was good.
Yeah.
But
I'll take 25-30%.
Yeah. So roll that chart back. Roll that chart back to, you see how, look at that nice rally that had right in February. Nice rally. Right. Yep. Right there. Peak. What date is that peak?
February 28th.
Okay. What was the next day? Yeah, that was the weekend where they went to war. Straight down, right? So there's a whole bunch of companies that have this pattern. They kind of rally strong into that. They looked at a lot of them. They're all falling around that kind of consumer retail stuff. So we got a special situations coming out. Look for that. It should be some stuff should be coming in your inbox for that. I think we're building up for that right now.
Yeah.
But yeah, so this is really interesting. There's a tool that I built, and that is a big thing for me next week. I got a big week next week. I get the special situations on Monday, and then on next Thursday, I'm going to be launching my service.
Yeah.
Oh,
that's really exciting.
Yeah, there we go.
So, folks, I'm just going to scroll through this. This is we yet to be named Tim's macro playbook that he's put together. And we're going to be unveiling this next week, but if you're live with me here, here's your first look at it. It's pretty cool. That's all you get to see though, folks. But just real briefly, 30 seconds. Why did you build what you built?
30 seconds. I built it for me. Seconds. I built a tool for me. I have trouble just being long the S&P. I don't like being long the S&P blindly. I think there's a better way to do it. I think you can, people talk about timing the market. There's ways to time the market. I like to get out of the way when I feel like the things are bad or about to happen. So I use macro signals from around the market to sort of give me what are the headwinds and what are the tailwinds in the markets. And each one of these sort of signals that I built, I think there's 60 signals or something in there. And they collectively will give a headwind or a tailwind to individual sectors. And the idea is you break the market down into 10 different sectors, and then you're getting headwinds and tailwinds. Mostly tailwinds is what we're looking for. And then you go sector by sector to go long. I mean, so far it's crushed the market.
And you can use this. It's worked great. No, you can use the strategy for ETFs. You can use the strategy for options on the ETFs, and that's coming next week. Tim, we got about 3 minutes. I can't wait for everybody to see this macro barometer. Do you have thoughts on the Anthropic moving their IPO up? Because I found that very curious.
It's panicky, right? It feels a little panicky.
Yeah. It feels a little panicky.
So guess
they're
who
worried that liquidity is going to dry up.
Guess who's married? Who just got married?
Who's that?
At Anthropic. I
CEO,
think it's
right?
The CFO. Do you know who? You know who she married?
No, who?
The guy who blew up situational awareness.
Okay.
Yes. So like
Okay.
he's long a bunch of Anthropic. That was like the one position he didn't get blown out of. and
Okay.
and they're married and whatever. You can read into that however you want, but like I mean, look, they're reading the market like, maybe we should IPO, and kind of they watch what happened to SpaceX. You can kind of see like they need to raise capital. It makes sense. We got to just kind of rushing to raise some money. Think about the splashing that's being done by the hyperscalers in the debt markets. I mean,
Yeah.
it's a race for capital right now because does it dry up? Is it a sign of the time? I mean, there's all these huge debate. You can't talk about that in 5 seconds, but it's something to think about. I think it's interesting. Again, I loved Anthropic when it was 300 billion. Like I was like, how do I buy this stock? I want to get in. It was when I first started using Claude. I'm like, I got to buy this stock. How do I get in? I'm trying to open a secondary account. I don't have those because I think those are. I'm not a big fan of that stuff. But 2 trillion. Oh my God!
Yeah.
What a home run in like 6 months.
Yeah.
That's
going to be
it's
going to be interesting. It's going to be very interesting. So, but we're going to be involved in that here at Option Pits, folks. So be on the lookout here. That is not something we're going to sleep on. We got a lot coming your way over the next few weeks, right? In about 3 minutes, I'm going to start doing my last session of Season of the Squeeze. I'm going to show you more about how short squeezes operate and stuff like that. Next week, Tim's going to be bringing you his macro dashboard, yet to be officially titled, but something that you guys are going to want, that's going to give you indicators into which sectors are going to run and which ones may run into a wall. We have we're going to be providing you with guidance around the Anthropic and OpenAI IPOs. If it's important to the markets, we're going to be trading it with you. That's why we brought on Tim to join us here at Option Pit, just as the bond market was entering the most volatile period in 30 years. So, 25 years, the Bush 2 administration, like seriously, it's that. So we're very happy to be your guides through this market and your trading partners. That's kind of what we view ourselves as. So we're really happy you're here. Yeah. Tim, I can't wait to see what this macro, your macro dashboard next week. And I know everybody here is excited to get a look. I gave them the little sneak peek preview, and I can guarantee you that there are people salivating for that thing.
So
that's going to be really
fun. Putting names. We got people putting names in the chat. Go ahead, throw names in the chat. Hey, if you're watching right now, how many people we got in here? Before I light myself up, 300 people. Tim at optionpit.com. Email me a name. Give me something to read. Email your name. I will read them all. We'll throw them in a hopper, and maybe we come up with some cool stuff. We got a link there to join that thing. Look for something for special situations on Monday. This one we have some time for, but
and if you want to get into, we just dropped a link to sign up for Tim's newsletter. This is where you're going to get all the information around his macro views. Tim does some of the best analysis here at Option Pit. So if you're not signed up for Tim's newsletter, change that right now. It is one of the, I read everything we put out here, but Tim is the one that I don't just kind of skim over every single time I go, I'm going to sit down and get rid of distractions, turn the TV volume all the way down, and read thoroughly, because there's going to be a nugget that's going to help me as a trader every single time. So, Tim, can't wait for next week. I hope you have a great weekend.
Same to you, buddy. I hope you have a good one too.
I mean, I get to go. I get to weed tomorrow. Who doesn't want to do that?
Boy.
Nothing like yard work in 100-degree weather. It's going to be awesome.
I'm doing trim work in the house, so.
Oh, there you go. All right. Well, tell you what. Well, I've got some trim work I need done here. I'll fly to Denver, and I'll do all your yard work for a weekend, and then you fly here and do my trim work.
We got 3 acres. I think that's a deal.
All right, everybody. Folks, there's Tim Colby, our head of macro trading. Tim, thanks so much. Have a great weekend, Tim. Tim Colby.
All right, guys. Thank you.
All right.
Oh, well, thank you, Amin.
Yeah.
Sorry.
Oh, yes. Good job saying thank you, Amin. All right, folks, we're going to roll right into the season of the squeeze. This is our third and final day. I'm going to be breaking down the anatomy of a short squeeze, talking about some opportunities, and we're going to dig into Alpha AI, our AI engine, and we're going to figure out some fun ideas and I'm going to have a potential trade for you here. So make sure you stick around and pay attention because it's day 3 of the season of the squeeze. So with that, let's dig in. Welcome to day 3 of the season of the squeeze, presented by Alpha AI, my short squeeze AI engine. Today, we're going to talk about the actual mechanics of a short squeeze. I'm going to talk to you about the number one thing to avoid when trading a short squeeze, how to tell when a short squeeze is a fake out versus a breakout. And I'm going to look for some squeezes live. And then I'm going to tell you how to continue trading short squeezes with me. So let's start with the actual mechanics. And I'm not going to go into I could sit here and pull out like one of my option textbooks and walk you through the actual mechanics. But what I'm going to do now is real briefly just describe to you what it's like being short stock, right? So when I'm shorting a stock, what I need to do is go to my clearing firm, right? So imagine short stock was a baseball card. A baseball card. Let's say it's a Pete Crow Armstrong autographed refractor, autographed refractor 1/1 that was in a tops pack. Great. And it's priced at $100,000. Now, my belief is that Pete Crow Armstrong, now this is not my actual belief. My belief is that Pete Crow Armstrong is going to fall off in September. I think Pete Crow Armstrong is going to bat right now. Since the break, he's been batting 395. He's been lighting up every home run. 30th hitter right now, lead for the MVP. I think he's going to fall off in September. So I go to you, me, Mark. I go to you. You're the one holding the Pete Crow Armstrong baseball card. All right. And I say, all right, let me borrow your card. All right. And I will pay you an interest rate on that card. And I will return it to you in 3 months. It will be the same condition. It will be the exact same card. I'm going to return it to you. So I take that card from you and I go to a card dealer, I go to a card show and I sell that card at $100,000. Everyone following along? All right. You had that 1/1 PCA worth $100,000. I borrowed it from you. I'm going to pay you $105,000 back in 3 months. All right. I go to a card show. I sell that card at $100,000. PCA falls off. Doesn't win the MVP, takes 4th place. 3 months later, I go to the guy who I sold that card to. And I say, PCA really fell off. How about I take that off your hands? And he goes, all right, I'll take the 100. And I go, no. PCA didn't win the MVP. In fact, he looked terrible. I'm going to give you $85,000. And the guy says, fine, I'll eat the $15,000. So I buy it back for $85,000. I return the card plus the $5,000 to rent the card for 3 months, and I pocket 10,000 bucks. That's a rudimentary way of describing how borrowing stock works. All right. But here's the thing that's different about stock, right? There's stock available to borrow, and I go out and sell it. But what if too many people are selling a stock and there's not enough people willing to loan out their stock? Right? Like if I go to that guy that holds that PCA card, P. Crow Armstrong, and I say, "Can I borrow that now and sell it and tell him what I'm going to do?" And he goes, "No." In the card world, I can't sell that card. In the stock world, I can still sell. I don't have a locate on. The float can actually be, the short float can actually start to exceed the amount of stock to borrow. That is what creates a short squeeze. Now, why are options so important to the short squeeze world? Well, let's look at a stock that is heavily shorted, that people always think is going to go down and seems to be bulletproof. Tesla. All right. Well, if I short Tesla, right, this is what the profit and loss looks like, right? If it drops $1, I make $1. If it rallies, I lose, right? It's basically the opposite of owning stock, right? Here's owning stock. Goes up $1, I make $1. Goes down, I make $100. Goes down $1, I lose $100. Shorting just moves the opposite way. But what if I'm worried that there's not enough liquidity? There's not enough stock to borrow. What if I worry there's not enough stock to borrow? Well, I can get short in the option market. This is why put pressure is such an important part of Alpha AI. So what if I, instead of shorting Tesla, there are a couple ways to do it. What if I just buy a $450 put? Going to act with the stock $355. It's going to act a lot like being short the stock, isn't it? There are other ways to create. There are other ways to create short stock using options. This is just one example, but this is why that Tripwire 1 is so important, because what it tells me is when people are circumventing shorting a stock and going out and chasing after puts. Because they want to be short the stock, but they don't want the risk of being bought in. They don't want to take the risk of the clearing firm saying, "Hey, we don't have stock to loan you. You need to cover your stock." If I buy these puts, I don't have that risk anymore. So that is why put pressure is so important. So now, here's how the end of the short squeeze works. You have a stock like Peloton or Wendy's or Lucid or Hyperliquid Strategies or whatever. And the whole world, or Groupon, or you name it. And the whole world is borrowing stock and selling it. The short float is huge. Well, something like news can hit where the Saudis are investing in Lucid Motors, or Wendy's might get taken out on an IPO, or Donald Trump mentions your name, or a big trader says, don't loan my stock out. You can go to your clearing firm and say, don't loan my stock. When they say, don't loan my stock, that stock has to come off loan. Enough people do that. Now I don't have any stock to borrow. And what happens? The clearing firm starts to buy me in. That raises margin on being short. Traders have to cover. Right? Let me walk you through this. Right? So I'm borrowing stock. I sell it in the market. I take the dollars and put them in an account. All right. Now, if the amount of stock to borrow goes down and shorts stay constant or even go up, well, my clearing firm is going to make me cover the stock. I'm going to have to buy the stock, which sends the stock higher. And then that raises margins. All right. Well, if my margins are going up, I either have to put cash in or cover some stock. So now I cover more stock. More people get margins where they have to put up cash or cover the stock. And then now the rest of the street sees the squeeze happening, and it goes up more. WNA says, do you get paid to let your stock be borrowed? Yes, you do. I have a lot of stock out on loan. In fact, when I own a stock and it's hard to borrow or people want to loan it out, if I believe in the stock, I believe in market forces, I'm always happy to loan out my stock. Make some good payouts. When J-Bone asks, when you say cover, do you mean buy? Yes. If I'm short a stock and I have to cover myself, that means I have to buy the stock. And this pattern of buying stock, stock goes up, margin prices go up, so more people cover the stock, will eventually trigger kind of your day traders. And they'll run the stock up until the hedge funds step in, or Goldman Sachs comes in and says, nope, that's enough, and the stock drops again. You can see an example of that in Hertz. Look at this. Nice, really nice squeeze. Hertz is $1.50. I don't know why you're shorting $1.50 stock. Why would the hedge fund stop it? Probably because they own the stock and they're selling it on the pop. All right. So think about it, right? I'm a hedge fund. I own a stock from $5, it bounces to 12 on a short squeeze. When I step in and I unload all my stock on the market, like I'm selling long, I'm not selling short, that releases a ton of new stock to the market to borrow, and that takes the short squeeze off. Stop me if I'm getting too technical. I'm talking to you, Hannah. Um, so that's how that works, and you can see the function. You have a fund that owns Hertz, probably from $2. Hertz starts to squeeze, right? You get your big buy-in, it pops, makes it all the way to almost $3. Hedge fund steps in, unloads 20 million shares into the open stock market. Now there's 20 more million shares to buy, to borrow against, that have been sold to everybody. Shorts run out, shorts stop shorting, and the squeeze is over. Florida Ace, if you agree to have your stock borrowed by a broker, doesn't that stop you from doing covered calls on that stock? I don't believe so, Florida Ace. All right, let's get back to business. So that is how that works. And then the options actually add to that because, traders won't just use stock. They'll actually go in and buy calls to protect themselves from a short squeeze. And the calls with their gamma can actually shoot the stock even higher because market makers are buying the stock to hedge themselves. So that, my friends, is the mechanics of a short squeeze. Now, what is the number one thing to avoid on a short squeeze? And the answer is getting in late. And I'm actually going to go back to GameStop because this is where getting in late and not understanding the mechanics here. All right. All right. The time to get into GameStop was not once it had moved from 950 to 120. By the time it got up here, that unwind is starting to happen. You can literally see when everybody pushes the sell button. Stock drops from 120 to 60 and closes at 48. You want to get in early, right? You want to get in on January 22nd or January 25th. By the 26th, hindsight 2020, you want to be long. But 90% of the time, when we've made a move from 11 to 37, if you try and buy 37 bucks, 99 out of 100 times you're going to lose. This is the exception. And yeah, you'll see volume exploding as well. So you can see the volume coming up. Peak volume in GameStop in the stock itself was actually on January 22nd. And this is partially because of Citadel. But you can kind of tell that the move is over when the volume starts to drop off. That's why volume is a very important part of one of our triggers in Alpha AI. Look, you can actually see this. Pay attention here. Volume is dead. I mean, not dead. It's doing a lot of shit stock, but the stock, $4. And then you see this initial volume spike, and volume stays bid. And then right around here is where Alpha would have triggered if it was running then. And then you see the volume spike. Volume stays high. And then you'll notice the stock is way up, but volume is way down from January 26th to January 27th. We're at the end of the day. We've had a busy day. The stock's around $87. And by the end of the day, volume is going to be about half of the previous day. I don't care how diamond-handed you are. If you are trading a short squeeze, even in a GameStop, and it's 3:15 in the afternoon, and your stock is up $40 from the day before, call it 100% from the day before, and you're saying, I should keep riding this. And then you look and volume is half of what it was yesterday. If you don't sell, you are going to lose 99 out of 100 times. You may have a chance in the morning to get out. Right? GameStop peaked the following day. It never had a higher close than January 27th. And that is the day the volume got cut in half. So how do you tell when a short squeeze is a fake out versus a breakout? Well, a fake out tends to show a single volume price spike that fails to hold with a quick reversal and no continuation, right? You don't see a slow increase in volume in the stock. It's like volume is flat. You get this flash in the pan pop, and volume pops as well. And then the next day, volume kind of goes back to where it was. And you'll notice the stock is dropping daily after that. That volume pattern is very important. All right. The price action relative volume is really important. Is the price going up as volume increases? If you see a volume spike on a short you're playing, and that volume spike sends the stock lower, get the heck out of Dodge. You remember my whole discussion on, a hedge fund finally says enough and unloads their long position and dumps 20 million shares on the stock market? You guys remember I just said that a couple of seconds ago? Type in a 1 if you remember me saying that. Yeah. All right. Well, if you see a volume spike and the stock doesn't go up, what do you think is happening? What do you think is happening? Yeah. Your hedge fund guy is unloading their long. All right. Yeah, short squeeze fake outs. You've got things like cost to borrow and days to cover. And if you see a stock and you think it's shorting, and then you realize that it's not hard to borrow, well, it may just be news driven. And really pay attention to options activity. If you are looking at options activity and a stock is popping and everybody is selling calls, that's short squeeze. That is not a short squeeze. That is a spike in the stock that everybody is unloading on. And yeah, a short squeeze, if you get a short squeeze and it doesn't fall through the next session, you also have a problem on your hands. That means the short squeeze was going to run out of time. All right, now a real breakout tends to have rising price, rising volume, persistent short interest, and follow through. This is very important. I told you that volume pattern, you want it to be slowly going up. You want the price to be slowly having rallied with volume before pop. And you want to look at what total short interest. Short interest is laggy. It's not the most reliable thing to look at. All right. So you want to see that cost to borrow, how hard a stock is to borrow, going up. And you'll see that in Alpha AI. All right. You want to see it having continuous kind of green candles. And you want to see that volume hold, and you want to see a fall through to the next session. You play a short squeeze, and then on a big volume spike and a big stock spike, and then you come in the next day and it's down a little bit, and you look an hour later and it's still down a little bit, probably time to call it a day. And you want to watch for rising open interest. All right, so now let's spend a couple of minutes looking for shorts, looking for squeezes. Ooh, USAR. Now, USAR, and folks, I want you to kind of look at what I'm going to walk you through what I'm looking at here. All right, I don't think USAR's borrow rate is 1,500%. But what I'm looking for and where we might get a trigger is on the tripwire one, which is our put pressure. Remember, it's what is put volume. That's why it's so important. And, RZLV, this is one that's been kind of on my watch list. BTBT, and USAR, out of the ones over 10%, are going to be the ones that I'm paying the most attention to. All right, then I need to see the stock starting to affect the movement. Right, I want to see volatility in the stock increasing. All right, well, we've got all these names, but a lot of them are eliminated. REI, nope. Replimune, nope. Sears, RZLV, eliminated. BT, you can see movement is up. USAR movement is up. Tripwire 3, that's my volume indicator, right? Is volume increasing in the stock? USAR and BTBT both sit there. Now, Tripwire 4 is important because what it's looking at is it's looking back every few minutes and saying, is this still that hard to borrow? Can think of it as a timer. Because you can have markets go wide for a little bit and look like there's real put pressure, and then they go back to normal and you realize there was never put pressure. So Tripwire 4 is that confirmation to make sure that Tripwire 1, 2, and 3 are right. And that is how we use this. So like, let's look at BTBT. Now this stock is under $1.50. I'm going to look at a 2-year chart. This is Bit Digital. Stock was $2.42 just on June 22nd. The low, 119, 120. They had earnings on the 13th. We had this nice volume spike here. Follow up on volume. Look at this, starting to get a little bit of a rally here. Follow up. Today's volume on this red candle, and these are short stepping in. You know, we're 95 minutes into the day. Average volume on the stock is 25 million. It's already done 24, almost 25 as well. Volume is going to remain high. You have massive call activity. You have traders interested to see where they're doing this. A lot of the volume is in the 1.5 calls expiring today. And you got some interesting action for next week. Let me see what we got here. 19 and 17. Yeah. So this is BTBT. It is not dinged yet. It is not dinged yet. But what I just did, right? You saw me. I looked at the put pressure physically, and I'm not going to walk you through the math here, but I did in my head Mark AI, if you will, or I used Mark Intelligence, not Mark Artificial Intelligence. I used MI to calculate in my head what this number says, and this number is correct. And then I walk through the volume number. It's going to be really high today. And then for Tripwire 3, this is movement. This is ATR. And you see movement is, in fact, increasing wildly in this one. I'm interested to see what the rate is on this. Well, this is going to go hard to borrow today. It is going to go hard to borrow today. Which is going to be fun. So I want to see BTBT hit my thing. All right, now Xena, Alpha is telling me I should do a trade in Xena right now. But Xena has earnings sometime soon. We don't know when. Last earnings were June 3rd. So it's telling me earnings are going to be shortly. And Alpha AI doesn't like to play in earnings. Neither do I. I programmed it that way because I don't like to trade earnings. But what we just saw was in a name like Xena, it's telling you the squeeze is still on. And maybe it's going to squeeze in earnings. You'll have that information that, hey, this would be going off if earnings weren't, less than 7 trading days from today. I don't like trading that. There are traders here that don't mind doing short squeezes into earnings because it can happen. I'm just kind of like it's such a variable that I don't really want to play in it. What do the numbers 1 through 3 mean on Tripwire 4? Great question. So that's my timer. And it's telling, so the 11 here is saying it looked back at this being over 10%, 11 times since we opened. So if RZLV had a green arrow on Tripwire 2 and a green arrow on Tripwire 3, I'm sorry, not day's earnings. I want to see a number 4 here. So if we had a 4 here in RZLV, or a 4 here in BTBT, it would populate with a trade. So Tripwire 4 is kind of giving us think of it as our timer. And it's making sure that we're getting real, consistent, believable data. Because believe me, some of these names, raise your hand if you've type in a 1 if you've traded BTBT before. I'd never even heard of the stock. So now imagine those markets can go a little wide and then tighten back out. That's what Tripwire 4 is looking out for. Right. I never heard BTBT. Now, USAR, I know. That's because of Frank Gregory. Having itself a nice day. But you can see the rate has gone to a more normal. 6% is about where USAR should be. So right now I got BTBT on the radar. But I did promise a trade. And there is a name I have been watching closely. Actually, there's several of them. And I wanted to see which one of them I was going to give you guys today. No. BHC, I know. BTBT is an interesting one. I prefer not to front run usually. But BTBT may be an interesting one. So be on the lookout. If I get a trade in BTBT, I am going to put that out. Yeah, I know BTBT is all about Bitcoin. I'm sure. All right, so I'm going to give you an example now of like a bonus trade. And that one is LCID. This is one I've been watching. I want to see if Wendy's is on there. Wendy's has increasing volume, but less movement over the last few days. Oh, yeah. So you can see the volume. It had that big volume spike and it has kind of fallen off, but it's held up here. What's interesting is we got a nice move on the 19th, we didn't get a big volume spike. You can see ATR kind of falling off as well. So I want to show you kind of a classic example of one. So this is LCID Lucid Motor Group. I want to go to the 3-month chart. All right, gets a big short squeeze, announces earnings, drops, and then has kind of slowly pulled back. The problem with LCID is that, and why it won't hit alpha, is that the movement has stopped. Volume. Yeah, you know, I got to be honest. My goal here was to give you guys a trade. And this is one of those days where, you know, maybe a trade is not the right call. Unless we get a ping on BT. I don't have one that I like enough, even as a bonus trade, to give to you guys. Because if I give you a trade that's not off of Alpha AI, that means I have to be really confident it's going to hit Alpha AI. And Lucid, I thought really strongly might, and some mechanics have changed underneath the hood. So I am the other name I have on my radar for one is Groupon. The problem I see with Groupon, it doesn't have a lot of stock to borrow, but there's not a lot of, it's not increasing in volume. So that one's kind of off the radar as well. So I would love to give you a trade. And if, if we have something hit Alpha AI, I will send it to you today. And don't worry, I'll send the exit as well. But I'm not going to force a trade on you guys when I don't see anything that I like. So now I want to invite you one more time to Alpha AI. Now, yesterday I told you that $19.99 for Alpha AI with the alerts was going to $24.99. We had a lot of people take the offer, and my customer care team talked to me this morning and said, Mark, we got a lot of inquiries about both the $19.99 option for Alpha AI plus alerts and the $19.99 for just the Alpha AI alerts. And I said, okay. And Drew and Ted and Steve, the whole team, they said to me, Mark, what do you think about giving them till 5 o'clock today to take advantage to get the $19.99 and $9.99? And I said, okay. So I've made the CEO of Option Pit call. I'm going to extend $19.99 for Alpha AI for a year with all the alerts, 2 days a week with me in the live room, an all-day live room. We have a special session in 2 weeks. 2 weeks from yesterday, Frank Gregory is going to meet with us, and we're going to look at our long-term portfolio. These are stocks under 10 that we think could go to $50. Frank's going to be joining us on a week, 2 weeks from yesterday, to give those to you guys as well. So I'm going to invite you guys to join me in Alpha AI through 5 o'clock today. After 5 o'clock, I've extended it enough. It's going to $24.99 and I think $14.99. You join today. You get the Frank session inside of your 2 weeks. This is the man that got me into USAR when it was $6. Got me into AREC. Got to send a red cap. Bunch of stocks that have exploded. SMR. So you're getting 2 full weeks of looking at Alpha AI and my alerts and maybe learning to trade it yourself a little bit. Great training. You're getting 4 sessions with me, including the session with Frank, where we're going to give you those special stock picks. And if you get to 2 weeks from today, after you've gone through 4 sessions with me, 2 weeks of trading, the special session with Frank, and you call my team on Friday and that Friday and say, I'd like a refund, we will give it to you, no questions asked. You cannot lose on this. I mean, it's dummy proof to join. And you're saying, well, what about payment plans? I'm a member of a bunch of different things. Well, one, if you're a member of a bunch of different things, you should talk to my team about Trader X, because Trader X gets Alpha AI and the AI engine, gets access to everything. If Trader X isn't for you, you can say, well, what about payment plans? Or you can see if you have credits in your account because you have other services. Give my team a call, 888-872-3301, and they're going to be happy to help you out. So you can do you can ask about payment plans. You can ask about whether you've got credits. You can talk to them about Trader X. Or maybe you just like dealing with somebody over the phone instead of on an order form page. And then my amazing group of people can handle everything for you. And folks that signed up, don't you worry. I will set, if there is a trade today, I will send you the open for it. And when I close, I will send you the close. So click the link right there and join, or give my team a call, 888-872-3301, and they're going to be happy to help you. And again, you have 2 weeks. You get 4 sessions, including the Frank session, and 2 weeks of trading to check it out. All right, everybody. I look forward to seeing you in Alpha AI. I think you guys are going to love how dynamic Alpha AI is as a trading engine. I am Mark Sebastian. I am your only option. I want to thank you guys for joining me. And as always, I want to thank you, Amin. Thanks, Amin.